What if I told you one of these is a 5,000-year-old safe you can drop on a table, and the other is a 15-year-old rocket you can carry in your pocket, and both people swear the other one is wrong? Gold versus Bitcoin. Same fight, different centuries. By the end of this, you'll know which one behaves like an anchor, which one behaves like a satellite, and more importantly, which one might belong in your portfolio. Hey, welcome to Seven Hills Equities. If you like crisp, practical takes on money that don't put you to sleep, hit like and subscribe. Quick note before we dive in. This video is for education and entertainment only. It's not financial advice. Do your own research and talk to a pro if you need tailored guidance. What is a hedge? Let's start simple. A hedge is anything you own to protect against a risk you fear. Inflation, currency collapse, market meltdowns, or just the feeling that your cash is losing value. A hedge is insurance. Sometimes it's slow and boring. Sometimes it's dramatic and weird. The question is, which risk are you insuring against, and which tool fits that risk better? A lump of metal or a string of code? The case for gold is tactile trust. Gold is the original brand. It's physical, it's heavy, and people have trusted it across centuries and continents. Kings, central banks, jewelers, and grandmothers all nod the same way when you say gold. That's not nothing. It's durable, it won't rust, and it has cultural recognition. You can walk into most places and the word gold means something immediately. Gold's main strengths are psychological and practical. People find comfort in objects they can hold. Central banks hold it to stabilize reserves. In times of panic, many investors move to gold because it's familiar. The downside? It's clunky. Storing, transporting, and liquidating physical metal isn't seamless, and its price history is steady more than spectacular, great for stability, not for thrill-seeking. Bitcoin, on the other hand, is the new kid that refuses to get old. It's digital, programmable, and designed to be scarce by code. Fans call it digital gold. Critics call it a speculative bubble. Both have a point. Bitcoin's superpowers are portability and permissionless access. You can move value across borders over the internet, often faster than bank wires and without asking permission. It also comes with baggage, volatility that can make your stomach churn, security responsibility that shifts to you, and a short track record compared to gold. But its upside is that it's designed to resist censorship and large-scale inflation in ways gold can't match if you live in a digital, locked-down world. Head-to-head, without the jargon. 5 simple categories. Let's compare them in 5 quick non-techie boxes so you can remember them at dinner. Number 1. Scarcity. Gold is limited by geology and mining. Bitcoin is limited by code, 21 million coins. Both are scarce, but scarcity feels different when one is physical and one is algorithmic. Number 2. Volatility. Gold is calm. Bitcoin is a roller coaster. Calm is good for sleep. Roller coasters are good for outsized returns and panic. Number 3. Portability. Gold is heavy. Bitcoin fits in a digital wallet you can carry on a tiny drive or remember in a phrase. Number 4. Track record. Gold has thousands of years. Bitcoin has something like a decade and a half. That matters when you value proven durability. Number 5. Use cases. Gold is a store of value, jewelry, and an institutional reserve. Bitcoin is a store of value, potential payment system, and a programmable asset. Short version, gold anchors, Bitcoin explores. Neither is strictly better. They solve different problems. Here's how these play out in the wild. Central banks quietly buy gold when they want steady, reputable reserves. Savers in unstable countries sometimes use gold jewelry to preserve wealth. Tech founders and some hedge funds stash Bitcoin as asymmetric insurance, small bets for potentially massive returns. In hyperinflation situations, people have used both. Gold for confidence and Bitcoin for moving wealth when borders are tight. Those stories matter because they show use, not just theory. If something works in real crises, it has practical value. How to decide? A 2-minute framework. Okay, so how do you decide? Ask yourself 3 plain questions. What am I hedging? How much volatility can I stomach? And how do I store it safely? If your worry is long-term loss of purchasing power and you want something low stress, gold's an easy choice. If your worry is geopolitical control of money, or you want a low-probability, high-payoff insurance policy, Bitcoin has an argument. Many investors, and I count myself among them, don't treat it as an either-or. They treat it as, how much of each? A common, disciplined approach is to allocate a modest slice to each based on your risk appetite. Gold for stability, Bitcoin for asymmetric upside. Common traps and myths. What to avoid. 2 myths to dodge right away. First, one will beat the other forever. That's a proud, unprovable claim. Markets change, technology changes, human behavior changes. Second, volatility equals uselessness. Volatility is scary, but it's also the price of big returns. If you don't tolerate the swings, you'll sell at the worst time. So know why you own something, and be honest about your emotions. Security and practicalities. The little stuff that kills, returns. Quick practical note. Owning these assets safely matters. With gold, storage and insurance cost money. With Bitcoin, custody and private keys are your responsibility, or you pay a service to do it for you. Either way, the friction and cost of managing these hedges eat into returns, so factor them into your plan. A realistic verdict, neither is a silver bullet. So what's the verdict? There probably isn't a universal winner. Gold is a proven anchor that soothes markets and central banks. Bitcoin is an experimental, high-conviction tool that offers mobility and upside in a digital world. If you want a memorable line, think of gold as an anchor, Bitcoin as a satellite. The anchor keeps you from drifting. The satellite explores new orbits. Both can be useful together. A short practical example, how a hypothetical investor might split it. If you want a pragmatic example, someone conservative might prefer a higher gold weighting for stability. Someone comfortable with tech risk might tilt more to Bitcoin. A balanced investor could hold both, maybe a small allocation to Bitcoin for upside, and a larger allocation to gold for steadiness. The exact percentages are personal. The idea is a disciplined allocation rather than an all-in bet. Also remember the emotional tax. If holding Bitcoin makes you check prices every hour and lose sleep, you probably own too much. And regulatory risk exists for both. Laws can change, taxes apply, and access can shift. Don't pretend those things won't affect outcomes. If you found this helpful, please like the video and subscribe to 7 Hills Equities. It really helps the channel. Tell me in the comments, are you Team Gold, Team Bitcoin, or are you mixing both? Remember, this is not financial advice. Do your research, talk to a licensed advisor if you need one, and only invest money you can afford to see work or rest without losing sleep. Thanks for watching 7 Hills Equities, where we make money ideas clear, interesting, and useful.